Hi, and welcome to the MySG Prop podcast, where we explore smart property investing and uncover insights from Singapore to the region. I'm CS, and in today's episode, on this 22nd of November 2025, we're diving deep into the developer sales statistics for October 2025.
Oh, this is exciting. We're talking about the market pulse, right, CS? All about the market trend, statistics, research, and studies. I've heard some really interesting numbers for October. It sounds like things were absolutely buzzing.
You got it, Rainey. And buzzing is an understatement. October 2025 really was a standout month, with sales reaching levels we haven't seen since 2007.
Wow, since 2007? That's over 15 years ago. So tell me, what's the big picture looking like? How many units were launched, and how many were actually sold?
Well, let's start with the supply side. Developers launched 2,233 units in October. Now, get this, Rainey. That's 111.7 times higher than September 2025, and a whopping 318.2% more compared to a year ago.
111.7 times higher? That's an incredible jump. What drove that massive increase in supply, CS? Were there a lot of new projects hitting the market?
Absolutely. There were 4 major launches in October that really made an impact. We're talking about Favor Residence, Penrith, Sky at Holland, and Zion Grant. These were the big players that significantly boosted the unit count.
I see. So with all that supply, how did the demand stack up? Did buyers snap them up?
They certainly did. On the demand front, developers sold 2,424 units in October 2025. This was 9.5 times higher than September 2025, and a solid 224.1% more than October 2024.
9.5 times higher in sales, and you mentioned those 4 major projects. How did they actually perform? I'm curious if all that supply overwhelmed the market.
Far from it, Rainey. All 4 of those major launches performed extremely well, achieving take-up rates ranging from 84% to 99%. It shows there was a strong appetite for these new homes.
That's fantastic. So the market really absorbed them. What about the different market segments, like the core central region, rest of central region, and outside central region? Any particular trends there?
Indeed. The core central region accounted for almost 30% of sales, while the rest of central region and outside central region made up 50.5% and 19.6% respectively. It seems the RCR was the busiest, as usual.
And who were these buyers, CS? Mostly Singaporeans, or are we seeing more foreign interest creeping back in?
Singaporeans continued to dominate, making up 86.7% of buyers in October. Permanent residents accounted for 12.0%. And interestingly, there were 31 purchases by foreigners, compared to 15 in the previous month. So, a slight uptick there.
31 purchases by foreigners, double the previous month. That's a noticeable increase. And what about their financial strength? Were buyers shying away from higher-priced units?
Not at all, Rainey. Buyers truly flexed their financial strength in October. Almost 2/3 of the sales were for units priced between $2 million and below $5 million. This indicates strong confidence and purchasing power in the market.
$2 million to below $5 million for 2/3 of sales. Wow, that's a significant chunk. And I heard about a record-breaking transaction, didn't I? Something about an unbranded residence?
You're right to pick up on that. A permanent resident paid a record $6,501 per square foot for a unit in the Aman-branded residence at Skywaters Residences. This was actually the second 99-year leasehold non-landed home sold above $6,000 per square foot, and it set a new benchmark for the highest unit price for such a property.
$6,501 per square foot for a 99-year leasehold. That's just mind-boggling. It really shows the premiums some buyers are willing to pay for luxury and brand names. What about executive condominiums, or ECs?
ECs also saw some activity, with developers selling 22 units in October. However, the dwindling number of unsold EC units is starting to reduce choices for buyers, so we can expect pent-up demand for upcoming projects.
Right, that makes sense. With all this strong performance, what's the outlook for the rest of the year and beyond, CS? Is Singapore's economy still holding up despite global headwinds?
Absolutely. Singapore's economy has shown remarkable resilience despite global tariffs, growing 3.9% year-on-year in the first 9 months of 2025. This robust growth is definitely a key factor in supporting buyer confidence in the property market. Many economists have even revised their forecast for Singapore's economic growth upwards for 2025.
That's reassuring news for buyers and the market as a whole. And what about new launches coming up? Anything exciting on the horizon?
Oh yes, in November 2025, the Sen launched for sale. It's the first project in the Upper Bukit Timah area in 5 years, and it sold 80 units during its launch weekend at an average price of $2,358 per square foot.
80 units on launch weekend. That's a good start for the Sen. And for the EC segment you just mentioned, any new launches there that might address that pent-up demand?
Definitely. Coastal Cabana, which will be the first EC in Pasir Ris in more than 10 years, is expected to attract strong pent-up demand when its show gallery opens to the public in December 2025. So watch out for that one.
Wow, a first in 10 years. That's going to be highly anticipated. So looking at the full year, what are the projections for total sales and price growth?
For the full year, developers are estimated to sell as high as 11,000 units. And barring unforeseen circumstances, private home prices are projected to grow between 3% and 4% in 2025. So a positive and stable outlook overall.
11,000 units for the year and 3 to 4% growth in prices? That sounds like a healthy and robust market. So amongst all these, which projects really stood out in October?
Well, in the core central region, Sky at Holland sold 662 units at a median price of $2,949 per square foot. Over in the rest of central region, Zion Grand moved 595 units at around $3,038 per square foot, and Penrith also did very well with 446 units sold. And for the outside central region, Faber Residence saw 348 units sold with a median price of $2,149 per square foot. Those were some of the top performers.
Those are impressive numbers across all regions. It really paints a picture of a strong market with diverse demand.
That's all for today's podcast from MySG Prop. I hope you picked up something useful for your next property move. Don't forget to follow or share this episode with someone who's into real estate too.
Yes, absolutely. More insights and new launch updates await you at mysgprop.com. Catch you next time.